Cathie Wood's ARK shows bullish stock buy, trims Taiwan Semiconductor. The leverage shift starts now. Here is the signal that separates noise from actionable change. We will map trigger, incentive shift, and downstream impact before the close. But here's what matters: at the same time, ARK deployed fresh capital into a different stock. That reallocation is a signal. Not hype. Not noise. A deliberate repositioning of billions in conviction. Let's start with why TSMC matters. TSMC manufactures over 90% of the world's most advanced semiconductors. When Apple needs chips for the iPhone, when Nvidia needs wafers for AI accelerators, when AMD needs production capacity, it goes to TSMC. The company is structural to global technology. It's not cyclical. It's fundamental infrastructure. So when Cathie Wood's firm trims a position in that kind of asset, you need to understand the reasoning. Is it valuation? Geopolitical risk? Or is it that Wood sees a better opportunity elsewhere, one that offers higher conviction or better risk-adjusted returns? ARK's portfolio philosophy is straightforward: concentrated bets on disruptive innovation. The fund doesn't trade on sentiment. It trades on narrative acceleration and cash flow inflection. When ARK moves money, it's because the opportunity set has shifted. Either the probability of a thesis playing out has increased somewhere else, or the risk-reward at the original position has degraded. TSMC's valuation has been under pressure. The company trades at a premium because it's mission-critical infrastructure. But that premium assumes sustained demand for advanced chips, specifically in AI and data center workloads. If Wood believes that demand cycle is moderating, or if she believes there's a competitor gaining share, or if she thinks geopolitical risk around Taiwan is pricing in too slowly, then trimming makes sense. But the real story isn't the trim. The real story is what she bought. ARK's core thesis for the past 2 years has been concentrated around artificial intelligence, genomics, fintech, and energy innovation. The bullish buy, the fresh capital deployment, likely landed in one of those buckets. If it's AI adjacent, that could be a software play, a training platform, or an alternative compute provider. If it's energy, it could be battery tech or nuclear fusion plays. If it's genomics, it could be a sequencing company or a synthetic biology platform. The implication is this: Wood is rotating out of commodity-adjacent semiconductor exposure and into higher conviction innovation bets. That's not a statement about TSMC's fundamentals. It's a statement about relative returns and opportunity cost. For investors, this creates 2 questions worth asking. First, is TSMC actually overvalued at current levels, or is Wood making a tactical allocation decision? Second, what is the bullish buy, and does that thesis have legs? Here's the contrarian angle: TSMC is still the best capitalized foundry in the world. It's investing billions into advanced node capacity. The geopolitical risk is real, but it's been real for 2 years, and TSMC's valuation hasn't collapsed. Wood might be rotating at exactly the wrong time, just as AI demand accelerates and alternative foundries can't keep up with capacity. That's possible. But here's what's more likely. Wood sees the market repricing TSMC as a mature infrastructure play, less disruptive, more regulatory risk, lower growth ceiling. Meanwhile, she's rotating into whatever the next phase of AI looks like. Not the chips themselves, but what the chips enable. This matters because it's a leading indicator. Cathie Wood doesn't time markets perfectly, but her repositioning does tell you where concentrated capital thinks the highest conviction opportunities are. When ARK rotates, large institutional investors watch. When large institutions rotate, indexes and passive flows eventually follow. Over the next few days, watch for 3 things. 1. Does the market reprice TSMC lower in response to this signal? 2. Do other actively managed megafunds follow ARK's lead and trim semiconductor exposure? 3. What was the bullish buy? If it's a genuine innovation play with limited coverage, that stock could see significant upside once the market digests the allocation. The broader implication is structural. We're moving from a phase where the commodity, the chip, was the constraint, to a phase where the application, what the chip enables, is the driver. TSMC will remain essential. But the highest returns won't be in foundry economics. They'll be in the software, the AI models, the applications built on top of that compute. That's what Cathie Wood is betting on. And that's worth paying attention to. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next.